Hey guys, this is Ben. I'm here with Juan Huerte, our mortgage guy.
What's up, Ben? Good to see you, brother.
Good to see you. Yep. Many people now just afraid from mortgage insurance. What can you say about that?
Yeah, that's kind of funny. I run across this a few times a year, where I'll be chatting with somebody and they'll say something like, "We're saving up for a larger down payment," right? And I go, "Okay, great. So how much are you trying to save?" And it ends up being two reasons. The first one is to avoid the dreaded mortgage insurance, and the second reason is with a larger down payment, the payment's going to drop a lot, right? So let's break that into two pieces. So with the mortgage insurance, you'll see this everywhere. Avoid mortgage insurance. And I think the people that are giving that advice have a lot of money, right? Maybe they don't understand what the reality is. So if you've got that type of money, it's not a bad idea. But for a lot of people out there that are getting into a house with 5% down or 10% down, don't worry about it. With good credit on a $400,000 loan, mortgage insurance on the low end is going to be about $90 a month.
Yep. Just let's clarify for our viewers what exactly it's mortgage insurance, what that includes, that under that, how you qualify for that, or
yeah. So if you put down 20% on a house, the bank that's holding that feels secure that if you stop making the payment, they're going to be able to recoup their costs. They can recover the house and sell it, right? If you put down less and you end up not making your payments, they're going to lose money. And so you pay for private mortgage insurance, which insures that loss, right?
So 20%, you don't need more than 20%, you don't need the mortgage insurance.
20, right.
And there are save this money.
Correct. But for those people out there that either don't want to use up all their money or don't have it, mortgage insurance is typically pretty low. So with really good credit on a $400,000 loan with 5% down, you're looking at mortgage insurance in that $90 a month range, right? So on a payment all in that's 23, 20, whatever the number might be, you're talking about a really small number. So when I tell people all the time, they're like, "Whoa, what's the big deal?" So they seem to think this mortgage insurance is this big blown up problem, right? And when I normally say to them, I'm like, "Okay, great, you want to put down 20%, how long is it going to take you to save 20%? And they're like, "It's going to take me 3 more years." Great, 3 years from now, the prices are going to be higher, you're going to be paying rent, right? And so when you break
interest rates probably going to go up.
Yeah, but even if they go up and come back down for 3 years of paying rent, right? And you're not, it's a misconception I see all the time.
They try to avoid unnecessary insurance. Right. But they are losing much more in the process.
That's it. So it's a good way to put it. They're avoiding a little problem. They're trying to solve a little problem, right?
That sounds
big, but they have a bigger problem on the other side, which is the cost of waiting, right? Yep. The other thing is when people say, "Hey, should I put down 5, 10%, or 20%?" When you put down another 5% on a house, it doesn't lower the payment very much. So what I see with a lot of families where they're like, "Hey, I got about 10% to put down on a house," we run the numbers and I say, "Look, you're actually going to qualify better if you put down 5% and take the rest and pay off that car note at $699 a month, right?"
Yeah.
Because it doesn't matter where the money's going. It makes them overall, they're going to be better off, right? So what I would say with people is don't throw in the towel. Now, if the credit isn't great, the mortgage insurance is going to be higher. So on the other side, if the credit isn't very good, instead of $80 or $90 a month, you're talking about $250, $260 a month, which is more. But it's still nothing outrageous, and it needs to be factored into the equation. And what I would say to people out there is run the numbers. How long is it going to take you to get to 20%, and what are you going to forego in the meantime? What are you going to be spending in rent? So there's a lot of misconceptions out there, and it's a shame because I think if people understood what was going on, they would be more comfortable with what's going on. They would buy sooner. Because I'll tell you this. One thing for sure, renting is a surefire way to the poorhouse, right? The average renter, the net worth of an average renter over time consistently stays around $5,200. That's it.
Okay.
The average net, and there's many sources on this, anybody can ask me about this, the equity in a house kind of has its ups and downs, but the average homeowner is worth about 55 times as much as the average renter. And there's a reason for that.
Yeah.
So don't worry about mortgage insurance. Just figure out if you can get into a house.
Thank you for the clarification.
Good to see you. Take care.
See you.